Welcome back to the channel, or welcome to the channel if it happens to be your very first time here. My name is Troy, and in this series that you're going to see today, I'm going to share with you 5 dividend stocks that all have ex-dividend dates of this coming week, which means you're going to get paid from all these companies sooner rather than later.
Show me the money. Show me the money.
What makes this list completely different than all the other top 5 lists you're going to find all over YouTube is all of these stocks have a long history of outperforming the market. They all have low payout ratios and super high dividend growth rates. So if any of that tickles your fancy, make sure you guys keep coming back every Friday at 8 a.m. Central Standard Time for a fresh list. With that being said, let's go ahead and jump right into number 5 on this week's list, which is American Financial Group, stock ticker AFG. Including today's video, I've now mentioned AFG 3 times right here on the channel. And if you go back to the very first time I spoke about this one, on July 8th of 2022, AFG is actually underperforming the market since then, but over the long term, that's a different story, and I want to show you the numbers behind why. AFG is a quarterly payer in the financial sector, paying $3.20 per share per year with a forward dividend yield of 2.37%. AFG has been paying and growing their dividend over the last 20 years. They have a 3-year dividend growth rate of 12.47%, a 5-year dividend growth rate of 12.18%, and a payout ratio of 25.17%. Now, at the time of recording, American Financial Group was trading 10.11% off of their 52-week high. They have an ex-dividend date of January 14th and a payout date of January 24th. And looking at this chart, you're going to be able to see the growth of a lump sum $10,000 investment into AFG versus the S&P 500 over the past 10 years. AFG would have turned that $10,000 into $45,835.62, which outperforms the S&P 500 by $10,873.50 in the same time frame. Next up, and coming in at number 4, is Accenture, stock ticker ACN. Including today's video, I've also mentioned this stock 3 times right here in the channel, and if you go back to the very first time I spoke about this one, on October 6th of 2023, ACN is also underperforming the market over that short time frame, but over the long haul, again, different story. Let's go ahead and check out the numbers. ACN is a quarterly payer in the technology sector, paying $5.92 per share per year with a forward dividend yield of 1.67%. ACN has been paying and growing that dividend over the last 14 years. They have a 3-year dividend growth rate of 14.02%, a 5-year dividend growth rate of 18.81%, and a payout ratio of 42.58%. Now, at the time of recording, Accenture was trading 8.69% off of their 52-week high. They have an ex-dividend date of January 16th with a payout date of February 14th. And looking at this same chart, over the past 10 years, that lump sum $10,000 investment, while only reinvesting dividends since, ACN would have turned that into $47,801.95, which outperforms the S&P 500 by $12,839.83. First up on the podium this week, and coming in at number 3, is Watsco, specifically the B-class shares. So that's stock ticker WSO.B. In total, this is now the 5th time I've mentioned Watsco as a company on the list, but the very first time I'm mentioning the B-class shares. And if you go back to the very first time I mentioned Watsco in general, that would have been on July 8th of 2022, where WSO by itself is outperforming the market. But the good news is WSOB, the one I'm talking about today, is also outperforming the market by even more since then. So let's go ahead and look at the numbers behind this one. Watsco is a quarterly payer in the industrial sector, paying $10.80 per share per year with a forward dividend yield of 2.02%. Watsco has been paying and growing this dividend over the last 12 years. They have a 3-year dividend growth rate of 11.44%, a 5-year dividend growth rate of 10.52%, and the only reason this one wasn't even higher on this week's list is because their payout ratio is a little bit higher than I like at 66.88%. There might be a reason for that, but that's what the additional research is for, so go ahead and look into that. Now, at the time of recording, Watsco would look to be also trading at their 52-week high. They have an ex-dividend date of January 17th with a payout date of January 31st. And looking here, over the past 10 years, while only reinvesting your dividends, Watsco, specifically the B-class shares, would have been turned into $68,431.33, outperforming the S&P 500 by $33,469.21. One thing that I thought was kind of crazy here, typically the returns between the regular shares and B-class shares aren't this drastic, but Watsco B has significantly outperformed Watsco WSO by itself over the past 10 years by a lot. I don't know what's behind that. It's worth the research. Definitely, if you look into that, let me know in the comments down below, as I'd love to know. With that being said, we're a little bit over halfway through this video, so you know if you like it or not. If you do, please take 1 second to leave a like on the video, as it helps me continue to grow my channel. Also, the even better way to let me know that you guys love this series, use the comment section down below. Talk to me. Let me know if you guys hate these stocks, love these stocks, would have them in a different order. Let me know down below. But now let's get to number 2. Bringing home the silver medal on this week's list, and coming in at number 2 is First United, stock ticker FUNC. Including today's video, this is now the second time I've spoken about this stock right here in the channel. And if you go back to the very first time I spoke about it early last year on January 12th, FUNC is outperforming the S&P 500, so let's go ahead and take a peek at the numbers behind this stock. First United is a quarterly payer in the financial sector, paying 88 cents per share per year with a forward dividend yield of 2.65%. First United has been paying and growing their dividend over the last 7 years. They have a 3-year dividend growth rate of 12.24%, a 5-year dividend growth rate of 15.44%, and a payout ratio of 23.47%. Now, at the time of recording, First United was trading 8.91% off of their 52-week high. They have an ex-dividend date of January 17th with a payout date of February 3rd. And looking at this chart over the past 10 years, First United would have turned that $10,000 into $47,313.50, which outperforms the S&P 500 by $12,351.38. And here it is, number 1, the gold medal winner on this week's list is Williams-Sonoma, stock ticker WSM. Including today's video, I've now talked about this stock 8 times right here on the channel, and if you go all the way back to the very first time I spoke about it, which was July 15th of 2022, Williams-Sonoma is crushing the S&P 500 since then. So let's go ahead and take a peek at the numbers behind this stock and see if it still has gas left in the tank. Williams-Sonoma is a quarterly payer in the consumer discretionary sector, paying $2.28 per share per year with a forward dividend yield of 1.18%. Williams-Sonoma has been paying and growing their dividend over the last 19 years. They have a 3-year dividend growth rate of 21.22%, a 5-year dividend growth rate of 18.18%, and a payout ratio of just 24.68%. Now, at the time of recording, Williams-Sonoma was trading 3.37% off of their 52-week high. They have an ex-dividend date of January 17th with a payout date of February 21st. And over the past 10 years, that $10,000 investment into Williams-Sonoma would have been turned into $66,041.24, which outperforms the S&P by $31,079.12. First, I want to say thank you guys so much for continuing to watch and support this series. It means the world to me that people actually look for these videos that come out every Friday. But I do want to say, if you happen to be watching this video after the date that appears on the thumbnail, aka January 13th of 2025, it would be in your best interest to make sure you guys are subscribed and ring the bell, because what happens is all the ex-dividend dates from any of the stocks you liked in today's video might have already passed if you're watching it after that date, which means you now need to wait 3 long months before you get paid from any of these companies, and we all know
Ain't nobody got time for that.
With that being said, even though the ex-dividend dates for last week's list is already passed, if you happen to be in the mood for 5 more super high quality dividend stocks, you can check out last week's video right here. But until next time, see ya.